Hey guys, it's Cameron Fleming here with the Fleming team of United Real Estate here in Columbia, South Carolina. And we're back today on our channel to have a great topic today. Today, we're going to do an interview with our preferred lender, Craig Johnson. Craig is somebody that we really trust and that has helped so many of our people purchase homes. As a matter of fact, he helped us to purchase our own home, has helped my sister, my cousin, right? So this is somebody that I'd recommend to my own family. And what I learned early on in my real estate career is that not all lenders are created equally. And it's so important if you want to relieve stress in your transaction to have a great lender. And Craig has really been there for us in terms of that. So we wanted to introduce him to our YouTube community so you guys know exactly the one to call when it's time to PCS or relocate to the Columbia area. So without further ado, hey Craig, what's up, man?
Hey, Cameron, not much. How about you?
Doing good, doing good. Yeah.
Glad to be here.
Yeah, I'm really excited. So our YouTube channel, we're always saying, hey, look, we have the perfect blender that is great at just helping everybody, whether it's conventional loan, VA loan, or FHA loan. So super excited to have you on the channel so we can kind of share some of your knowledge. So what I wanted to do, Craig, today is I just wanted to kind of go over some frequently asked questions that I get from potential buyers and people that need to buy and sell at the same time as well. So I'll get started and just kind of ask the first question, Craig.
Okay.
In your experience, when do you think someone should apply for a mortgage? Like, how does that timeline look? Can you tell us a little bit about that?
Yeah, Cameron, so that's a great question because I know that a lot of clients call and they want, hey, let me see this house. And they think that's the first step. So the best time to apply for the mortgage is when they call you to say, let's look at this house, they need to go ahead and get qualified. Not only just because that it's required, most of your sellers want them to be pre-approved before you take them in the home. Maybe they qualify right off, maybe they don't. If they don't, we have time to give them pointers to increase credit scores. If they do qualify, you're taking them into a home that they can actually write an offer on right there because the market's so hot. If they don't do it in that order and you show them the house, then they call me to get pre-qualified. And if I have to get additional documentation, it takes a few days, then they may have lost out on the opportunity to buy the house. So really the best time is initial before you even look.
Right. And I just totally agree with that, guys. I mean, we do this a lot. We help a ton of people, as you guys know, and basically no one ever buys the home before they get the pre-approval. Like you have to get the pre-approval. You have to have a conversation, and it's really not about the pre-approval. We understand that you may be likely to qualify, like you're probably 100% solid. But what I find from the smart buyers is, and you've heard me say this, they want to know all their options and create a plan. So highly recommend that really be your first step. Before looking at any homes, before trying to really dive into this thing, let's talk to a lender and see exactly the plan that we need to create to help you move forward. All right, let's see, what do we have next? Craig, how much should someone have saved to purchase a home?
Yeah, that's a great question because there are so many different loan types, from conventional with a minimum down payment of at least 3% to possibly USDA or VA that has no down payment. But there always are going to be closing costs, right? And a lot of our no down payment, USDA VA clients think that they don't need any money, but they do need that 5 to 10,000 according to purchase price, from 150, 200 to 4 or 500,000. So they definitely need some closing cost money saved, and then they're going to need probably about $2,000 just for their home inspections, their earnest money, their appraisal fees, those little things that come up. So they need that little bit of money. And then, of course, according to loan type, a minimum of 3% of the purchase price. But more is always better. You don't have to always use it. And a lot of times I ask clients, how much money do you have saved? They don't always say how much, but I have to let them know I'm not to try to spend all your money. We just want to make sure we look at all your options, because the more money you have opens up more doors.
Right, exactly. And I think one of the biggest things to kind of note is I think there's an assumption because of how the market has been in the past that the seller is going to give you a gift in terms of closing costs. But, and as you and I know well in today's market where sellers are getting so many multiple offer situations. They're just not going to give you that gift. So in order to really get the process started in today's market, you really need to have some money saved up.
Yeah, and also just to extend that a little, sometimes I'll have a conversation with a client that really doesn't have maybe their down payment saved up. So then we dig a little deeper. Do you have a 401k that you can take a loan against? Other options, because it doesn't always have to be cash from your bank, and you don't have to cash out of your 401k in a permanent basis. You can actually just borrow against it, pay yourself back. That way you haven't depleted that asset and you got your new asset because you're able to buy your home. So there's always other little ways, or maybe a gift from a family member can come into play to assist also.
Great advice, Craig. Really appreciate that. While we're on the topic of money, let's talk a little bit about credit. Tell us a little bit about what's important in terms of credit to qualify for a mortgage. Tell us a little bit about what you're looking for in terms of credit to qualify for a mortgage.
So, that's varies on loan types, right? Because we go as low as a 580 on a credit score. But ask me how many people move forward with that. It's basically none. And the reason is your 580 borrower can't have the same interest rate as your 740. You got to pay more for it. So typically with a lower score, when we get into all the details, people will have to increase their scores if there are lower to where they can get to a better number. But you really want to have at least a 620. That's kind of where I tell you want to be at. So anytime I see improvements, even if they come in at a 620 and I see they can get to a 660 with very little paying down a credit card or something, I generally will recommend that just because it's going to make the terms better. Their interest rates can be better. But really a 620 is where you want to be. But we also, as you already know, if you come in and you don't qualify, we're going to look and see, can we assist you in ways to increase your scores to qualify?
Right. And this is one of the absolute major things that I really find that the people that call Craig enjoy, as opposed to your big box lenders, right? The big box lender, they're just going to say, hey, here's where your credit is. Here's your option, right? Whereas in Craig, he's going to take a look at what you have going on. And if there's room for improvement, even if you qualify, right, he wants you to get the absolute best deal on your mortgage. So he's going to help you to do that. And that's something I really appreciate that you do, Craig, for all of our clients. And we hear it so much from the people that you've served, alongside us, how impressed they are with how you put them in the best position to succeed. So I definitely think, for all our viewers, if you are gonna, go out and look for a pre-approval, I think Craig should definitely be the first stop to do that. Let's see here. Craig, I get this question a lot. What's the difference between a mortgage broker and a mortgage lender?
Okay, so the big differences are with a broker, they don't have control of their operations. So in other words, operations, I mean like the underwriting, the closing, the funding, all that, because they're really just a loan officer that has their own shop, and maybe they have a processor that they hire on that actually puts the documents together and sends it out to all the different lenders that they work with. So in other words, they shop you to different companies. And at the end of the day, they're looking to shop to get you a good deal, but also looking to shop to see where they get the biggest spread, meaning they can make a little more money on that loan, which understandable because they do a little more work. So they don't have anybody directly working for them. With us as a mortgage company, we have total operations from start to finish. Like I have assistants, processors, closers, funders. Many times you've probably been sitting at the closing table and the attorney says, we're waiting on something. You can text me. I can tell you exactly where we're at, when it's going to fund, and tell you all that. That's not always the same. If you get with a broker, they don't have quite as much control. That's the biggest thing. And then the second thing would be a lot of clients do not like their loan to be sold. Mm-hmm. With a broker, it's going to be sold because they're just a shop, right? With a mortgage lender, they can sell your loans. And I've worked at mortgage companies that do sell your loans and went through the headaches of clients calling me a month later and say, hey, why did my loan get sold? Right. And then everybody gets frustrated. So I choose to be at New American Funding because we do service our loans. You're going to make your payments to us. If you have a question, a lot of times I can help you with it, or I can put you in contact with who can help you. So that's another big difference is you don't know who you'll be paying your payment to after you close with the broker versus lenders that do self-service.
Right. Yeah, that's even something you helped me out with, man. I appreciate you on that one.
You're welcome.
Yeah. So cool. That sounds good. And one of the things I kind of want to touch on that is, I mean, I get it all the time. I'll be honest. A lot of people, I think I'm so gung ho on you that a lot of the people I talk to call you, right? But there's that few that they're like, well, why does it matter who I'm using? I already talked to this person. I don't want to get my credit pulled again. And I think the biggest challenge that I just find with that is what ends up happening. I mean, almost every single time, especially when someone's going with a USAA or a Navy Federal or Wells Fargo, Bank of America, definitely when they're going not with a local lender, those challenges around, timing and, does your lender actually know the processor and assistant? And then, what ends up happening is we have a delay, and now you thought you were going to be moving in on your home, on this date, and either, hey, look, we got to push the closing back. We don't care about your movers, and no, you can't move in, or, hey, we can't close this thing at all. And so I'm super proud to say, Craig, and I really appreciate you for this, because before we got together, I work with other lenders all the time. And to be honest, it was a 50-50 crapshoot of whether they're going to close the deal or not. And I'm super happy to say, out of the 100+ deals that we've done together, you've never left me hanging. So it's kind of why I make sure that, even if you have a USA or a Navy Federal, let's make sure that we get a second opinion from Craig. And one of the things that I'm super proud of, Craig, and you don't know this, but I tell everybody that when they have a conversation with you, they don't stay with who they thought they were going with. You give them so much information and help them out so much that pretty much everybody that takes that plunge to give you a call, they use you. And I think that's a testament to how good you are.
I appreciate that, Cameron. I really do, because I think when you really enjoy something you do, you get excited and you don't have to work at it. And I know you guys, you and Shayna, obviously you love it because you do so well. And I love when clients call me, love when you have, refer people to me. And,
Right.
and I just love giving them the knowledge too. And I think that's one thing that makes some clients happy is I don't just say, hey, this is this. I say, this is this, and this is why this is this, and just kind of give it a little more detail of more about what's going on with them.
Right. Got it. And so, Craig, I kind of just, I have one more question for you. And this is a question that I get often. How much does somebody need to make in order to qualify for a home loan?
Okay. And that question is one really based on their debt, right? So if they have no debt at all, say they have a 780 credit score and they make $35,000 a year, that's going to be probably, we can use 50% of that, which is going to be about $1,200, $1,300, just going off my head here, 100 a month. So that would qualify somebody for a little over $200,000 home, right? But say they got a $500-$600 car payment, well, then that went down to $100,000 pre-approved.
Mm-hmm.
So a lot of times it just comes down to how much debt. So one of the great things, if they don't have a lot of debt, you don't have to make as much money.
Mm-hmm. Got it. Yeah. And one of the things I really appreciate about the differences that I see between you and other lenders is typically if someone has a pre-approval that they're not happy with the amount that they're approved for, a lot of times you can get them qualified for a little bit higher, I think, because of some of the things that you guys do on the back end. So that's another interesting thing. So if you have gotten a pre-approval and you were hoping to get a little bit more, I definitely recommend reaching out to Craig. Craig, is there anything else that you think that people should know as they're relocating to the area, or maybe even if they just live in the area and they're looking to purchase a home, in terms of trying to get a mortgage and create a mortgage plan?
I really think that sooner's better. My biggest thing I get from people is well, I want to do it next year, so I don't want my credit pulled today.
Mm-hmm.
I try, I'm not pushy, but I do try to insist that if you think you're doing it next year, getting your credit pulled now, so we can see if your income's high enough, if your debt's low enough, to see if your credit's right. You might take 3-point hit on your credit for doing it now, but at least you're good. But most of the time when I pull someone's credit that's looking to wait a while, there are things I can suggest that will put them in a much better place when they're ready. So my biggest thing is just the sooner they apply and let a lender, hopefully me, take a look at their credit and assess it, the better.
Right. Beautiful. And yeah, you and I are super alike on that thought process. Let's not try to, take a shot in the dark. Let's you know, I always tell people, if you want to know what you need to do to get the money, talk to the person that's going to give you the money, not to the credit repair person, not to your friend who says they took their credit score from here to there. Because just truly, I mean, and it's the same thing when we try to help people look for houses, you know, and you know this as well as I do, every person's situation is different. Like,
Right.
no two situations are alike, and there are things that can come into play that you just really need to plan and prepare for. And I just find the smartest people want to make sure that they have a full understanding of what they're trying to accomplish.
Right. And I'm just going to tag on the credit repair. Those are the ones that absolutely need to call a lender more than anything, because credit repair is not a loan officer. They don't know that FHA makes you remove a dispute on an account that's over $1,000 that's less than 24 months old.
Right.
They just say, oh, dispute this, it's negative, and it'll make your scores go up. And then you come to me and I'm making you remove every one of those disputes. so we're getting right back down to the credit score you had when you went to credit repair and you spent all that money. So yes, if they know there's an issue, it's better talk to a lender, so at least we know what it is they need to work on. And if they go to the credit repair, then you don't want to dispute those things. They have the knowledge to know not to do certain things that's not really going to help.
Right. Great. Well, Craig, I really appreciate you coming through and doing this little interview with us. We want to provide our viewers and the people that work with us with the most information. We want them to be the most informed buyers and sellers in today's market. So we just want to give it all to them, right? We just want to give them all the information. And then we really appreciate you guys for viewing this video. You guys watch all this information and then you give us a call and we get you through the process with as least stress as possible. So we appreciate you for that. We're going to include Craig's contact information down below here in the comments. So, you know, if you're thinking about moving to the area and you want to work with the Fleming team, just feel free to just go ahead and give Craig a call. And I mean, sometimes you can give Craig a call even before you talk to us. One of the things I might recommend in terms of giving Craig a call is send him a text first. Say, hey, look, we've been watching Cameron and Shana's YouTube channel and we're thinking about moving to the area. We want to create a mortgage plan. When's a good time to reach out to you? And Craig's super good. He works, you know, he works weekends. Like he'll schedule a call for a weekend if you need to do that, or, you know, after 5 o'clock if you need to do that. So shoot him a text, let him know, you know, who you are, how you found them, and let's go from there. So until next time, guys, we really appreciate you and talk to you later.
Thanks.
All right. Thanks, Craig.